I just started a, I just did a whole like 15-minute video with no sound, which is hella annoying. So I'll go down to the 4 hour. We use the fractals indicator to determine our bias as well as the overall trend. And you can see a candle closure. We look for a candle closure below a fractal low or a high. And because we're working in London session on the Friday, you can see we close below. So we're looking for a bearish short. So yeah, I'll just remove all the drawings again. So you can see we have buy side liquidity here and obvious sell side generated liquidity here. I chose this buy side liquidity because of a 15-minute order block using the candle closes. See it tapped in there and just reversed. What did it do, guys? So buy side liquidity, sell side liquidity. We go down to the 5-minute, so we know what we're trying to bounce off. And there's two models I look for, but this was the buy side to sell side / sell side to buy side model. So as you can see, we come up, take out this fractal high, and then very important, we displace below this fractal low. You can see I've highlighted it in bright red there. And then essentially once we've displaced, we look for an optimal trade entry, which is 0.5 to 0.62 level. And then we can look for PD rates within that range to determine what's going to be respected and what's just going to be missed. And because the 0.5 and 0.62 level was inside this fair value gap, it wasn't a clear order block or breaker, I chose this fair value gap, which is the obvious one to choose. And then essentially you just put your entry at the 0.5 level, stop at the high, and then target and sell side below. And I wasn't expecting it to rapidly go lower on this particular day on the Friday, because obviously you can see this God candle here, this is non-farm payrolls. And I was expecting some chop, but eventually taken out sell side because it was generated for non-farm payrolls. But I thought it was going to liquidate everyone at non-farm payroll, but it did before. Then it liquidated people again, and then rallied. But yeah, that's the buy side, sell side, buy side model. I don't know what I'll call it, but you can see I highlighted a change in state here because here was too wicky for me. It was too close, so I highlighted that, and we changed the state and we broke that fractal low as well. Didn't displace, but we displaced below this one, so that's all we needed to take the entry. So as well as that, I had a lot of conviction in this short because I was already in a short from the previous day. Now I'll go over the previous day short. This is this is great. I can show you two models within 2 days. So again, we determined our bias before. I think it was up here. We were bearish on the 4 hour. So I'm bearish coming into London session. And then with this model, you anchor your Fibonacci tool from the low of Asian session to the high, and then 0.079. You see how it comes down, comes back to 0.079, then displaces below. So this is two models in one. So I could essentially double my risk, maybe do, so risking 1.5, instead of risking 1%, I can risk 1.5% or even 2% of the account. So yep, we come back up here, displace, retrace, and then I was in this position through New York session, through Asia session, and then finally hit the sell side as well as taking this position, another position there. So yeah, it's the same sort of thing because we displaced below. It doesn't have to displace below with this model, but because it displaced below, we can look for an entry for the 0.5 or 0.62. So what have we got here inside this range? We can see we have an order block and clear fair value gap. So just enter on either 0.5 or 0.62, preferably the 0.5 because you know you're going to get in. You're not going to miss it. It's not going to just come close and then reverse in your direction. Then the stop above the high, targeting sell side below. As you can see, took fucking ages. Yeah. Now we can also use another tool for our targets. Use extension targets. Let me just delete some of this actually. Oh well. So you anchor it from the high to the low that started the retrace, and then extensions. See where it lines up. I think that lines up pretty good. You could see comes close here, and boom, finally hits it. Done. As well as that, you could see 0.5 level. That was the start of the midnight open. Use that as a target, etc., etc. There was another trade that was good for the extension targets. Yeah, back here. So clear build up in sell side and buy side. We have trendline liquidity slash buy side liquidity, and we could use this as our first target and then second target. You see we sweep. We don't do the 0.079 because it just displays straight away. So that's just the buy side to sell side to buy side model. So it comes into 0.5 into that fair value gap and order block, and then rallies higher. And then for targets, we can anchor it from the low to the high that started the retrace to get you in. And buy side liquidity rests just in between these two levels. So that would be the target. And then if you could see right on that level, it just respects it. Because that's a -1 standard deviation of the move. So essentially it's just the same. Yeah, you get what I mean. And then reverses, and then comes back out. But that's just it. This is in New York session. I'm just focusing on London session. But yeah, it works on gold, DAX, etc., etc. What else I could? Let's see if this lines up with the macro. Not really. You don't get tagged in on the macro. You get tagged in just on the 415. But if you can see 350 to 410, that's when the move starts. So we have the order block starting at 350, displacement at 4. It's all happening within the macro, just the entry wasn't. But I think back here, was this in the macro as well? So we displace outside the macro, but we enter on the macro. And remember, it's the last 10 minutes of the hour and the first 10 minutes of the next hour. So it's a 20-minute window. Let's see over here. Comes back to there. Comes back to that 0.79 level at 310, which is the macro. Displaces, and then get tagged in at, again, macro 355. And then the end, yeah, 405, and then that's when the retrace ends, reverses. Macros are a wonderful thing, but in real time it's hard to get used to because you don't know what's going to work, what's not. It could be a faker, could be manipulation, because macros can manipulate, and then outside the macro it can displace to the other side. It's yeah, but rule of thumb, if I'm either entering on a macro or it created the displacement on the macro, then higher probability. But yeah, non-farm payrolls was today, Friday, yesterday. And I didn't really want to be in that, so I'm kind of glad that it took out before because I would have exited the position about 15 minutes before if it didn't hit targets. But it did it way before, so happy with that. Yeah, it works on the DAX as well, but DAX is really better for scalping methods because it just with this sort of model it takes a lot longer for the targets to get hit. It goes overnight a lot more, and it's usually a higher risk to like a lower risk to reward, so you want to like a larger stop because obviously when the session opens at the 3 a.m. mark, we have lots of volatility, so lots of displacements. So yeah, so I prefer Euro USD and gold. This one model, but preferably Euro USD. It's or GBP USD. It's the go. Alright, I'll finish that there. So yeah.